Us at 21, and I would argue the wider Bitcoin market views that's Bitcoin's opportunity, is to be the vehicle that's best at humans creating value for those around them and being able to save and persist that into the future. Now, if you look at an Ethereum or a Dogecoin or a Solana, what's their opportunity? Where are they disrupting and solving a problem?
Digital asset treasury companies have emerged as a new and powerful force at the intersection of crypto and TradFi. These are publicly traded firms that have made the accumulation of digital assets like Bitcoin a core part of their business strategy, moving crypto from a speculative bet to a primary treasury reserve asset. Our next guest, Jack Mallers, is the CEO of TwentyOne, a soon-to-be public company that will be the third largest corporate holder of Bitcoin. Hey, Jack.
Hey, how are you?
I am living the dream. How are you doing?
I'm living the dream too.
I got to say, you are not in your closet today, and I was looking forward to seeing that, but I guess this will have to do.
I'm in Jackson Hole doing a little business, talking a little monetary policy. I hope I have the fortune of sharing an elevator with Jerome Powell and seeing what he's going to do with the rates on Friday.
If you do share an elevator with Jerome Powell, I very much so hope that you live tweet that for us.
Oh, yeah. We'll talk about Bitcoin. I can promise the internet that much.
I love that. All right. Well, we'll be watching your X account to see if any run-ins with Powell happen. But you're here today to talk
Knock
about...
on wood.
Yeah. We're talking about Bitcoin treasuries today. And the last time you and I spoke, we really spoke about you and your ethos. But I want to dive in to 21 today. So just for our audience, let's start by level setting here. Give us a brief introduction to 21.
Yeah, 21, we are taking the company public with a SPAC with Cantor Equity Partners. We currently have the third largest corporate Bitcoin position in the world in escrow, assuming a successful merger. And it was founded by Tether and myself with a minority but significant stake taken by SoftBank. So we want to be the best way to participate in this Bitcoin phenomenon in the capital markets. We plan to implement and run what people call a Bitcoin treasury business. But I think one of the biggest differentiators at 21 is we don't necessarily consider ourselves a Bitcoin treasury company holistically. Our founding group and our board consists of people that have built and currently run very successful, cash flow positive, high margin businesses in the space. We think there's a lot of opportunity to not only grow Bitcoin per share and raise accretive capital and acquire Bitcoin on our balance sheet, but build Bitcoin software, build Bitcoin cash flow, and change the world with the technology itself. So we are a pure play Bitcoin business. Everything about us stems from the white paper and OGs, as they say, that are now bringing Bitcoin to the capital markets in what we think is an attractive fashion. So that's who we are. We have let the markets know that we have submitted our S4 to the SEC. So we're currently in our quiet period pending approval. But it's an exciting time for us and the wider industry at whole, which I'm sure we'll talk about.
Tell me about the building Bitcoin software piece. What does that look like?
Yeah, well, unfortunately, there's only so much I can disclose given we're in our quiet period now, but we have let regulators know and the public know that we intend to be a financial services company. So I think you can take a look at Tether, my co-founders, and some of the financial services they've been able to build. They're obviously the largest stablecoin in the world, the inventor of the product itself. They have a big lending business. They're working in AI. They're working in Bitcoin mining. There's not a business model that they haven't been able to productively add value and cash flow in this space. And then for myself at Strike, I mean, we're probably the biggest Bitcoin only financial services firm in the world and probably the highest net profit per employee of Bitcoin only financial services in the world. And we offer brokerage, we offer custody, we offer collateralized lending. And so I think that gives you a flavor and a taste of our expertise and our operational resume, so to speak, in building these types of businesses. And I think the capital markets give us access to capital and access to opportunity that we haven't had yet in our other businesses. And so we see a really exciting future. And going back to, we don't want to be known as just a Bitcoin treasury company. We will absolutely have a Bitcoin treasury business. Like I said, we already have the third largest corporate treasury in the world. So we have a significant position already, even pre-approval, but that's only part of our story. We do think that there's a huge opportunity for these treasury companies to actually build cash flow and see growth and contribute to the wider Bitcoin story and its utility function. We do view Bitcoin as money, as a monetary good that's competing with the treasury bond, with currencies like the dollar, with a basket of real estate portfolios, with an equities index. And we plan to help drive that adoption forward by contributing products to the space.
Midnight is introducing a novel approach to token distribution. The Midnight Glacier Drop is the first in a multi-phase distribution of the Night token aimed at empowering a broad, diverse community to secure the future of the Midnight network. Holders of ADA, BTC, ETH, SOL, XRP, BNB, AVAX, and BAT are eligible to participate in the Glacier Drop phase. Help usher in the next generation of blockchain with rational privacy and cooperative tokenomics on the Midnight network. To learn more about the Midnight Glacier Drop, visit midnight.gd and claim your night. You've introduced Bitcoin per share and Bitcoin return rate. You just alluded to that just a few minutes ago. Tell me a little bit about these key metrics and how they're going to work as part of a public company.
Yeah, I think this goes back to one of our many missions of making sure that we're the best or one of the best ways to participate in Bitcoin in the capital markets. That is our mission and dedication and our commitment to our shareholders, is that we're not here to necessarily win at the old system. We're here to build a new one. And that goes down to our KPIs. So the traditional KPI for a company like us is EPS, earnings per share. We find that metric not very useful. It's outdated, it's legacy, it's analog. And the reason is that everything is performant in dollar terms. So your earnings are probably up in dollar terms because your iPhone is up in dollar terms, because your Starbucks coffee is up in dollar terms, because your rent is up in dollar terms. It's a fancy way of just showcasing the dollar is down, because monetary debasement and currency debasement has to happen at the nation state level, and the dollar is just losing purchasing power over time. So we thought to ourselves, what's the best way for us to communicate to the market that we think in Bitcoin terms, and that Bitcoin to us is the new hurdle rate. And we want to measure our business and our success and communicate to our shareholders that we can be performant in a Bitcoin per share basis, because that's a unit of measurement that can't be printed. And it's actually the best performant unit of measurement. And if you can't be performant in Bitcoin, then what's the point of owning a share? You might as well just buy Bitcoin. And so that was the design of the KPIs, is to show the wider market, the capital markets, existing shareholders and future shareholders, that we're not taking the lazy route and measuring ourselves in dollars, because as I mentioned, everything's performant in dollars. You can buy a stack of coffee beans and be up year over year and post returns in dollars, but it's harder in Bitcoin. And we're planning to hopefully pioneer the way the capital markets measure businesses in a measuring stick that's a little bit more fair and honest to the investor.
Well, tell me a little bit about how you hope to educate investors and manage that narrative. Public company, usually reporting in dollars. This is very different than what we've seen in the past. Curious about feedback you've received and how you plan to manage that as you go public and as you get investors.
Yeah, well, to be honest, one of the reasons I founded the business with Tether is the opportunity that we see in the capital markets specifically. I think the capital markets are going through, and just the wider investment base, portfolio managers, endowments, pensions, sovereigns, they're going through a very drastic change, which is the 60-40 portfolio for the first time is being highly questioned or is considered dead. And this is that idea of weighting your portfolio with equities and bonds or long duration instruments. And the reason for that is, bonds have been poorly performing over the last 5 years since COVID. And stocks, if you take out the Magnificent Seven, actually are negative in real terms. And so I think you're seeing these equities are artificially inflated. I think that the equities are going to come down in value and in multiple as tariffs continue to hurt them. Seeing Apple, Ford, Procter & Gamble, these companies are taking multi-billion-dollar annual hits because of tariffs. It's going to eat into their margins. It's going to eat into their multiples. And so investors are actually seeking real returns, deep, large capital pools, arguably for the first time ever, at least in this modern post-1971 era. And so coming to them and saying, well, we're going to measure our business success in real terms, which we consider Bitcoin terms. We're not going to measure it in a depreciating, debasing dollar. And we're going to make sure that we make our decisions predicated on having more Bitcoin on our balance sheet than issued shares in an accretive fashion. And we're going to achieve that through smart financing and capital raising and acquisition of Bitcoin, and also building products. One of the greatest ways to grow your Bitcoin per share is having cash flow, because there's no dilution in operating a business line that's producing net profit for the world. And you can sweep that into Bitcoin on the balance sheet. And so I think investors, believe it or not, are actually excited about a future where the 60-40 portfolio is actually a 50-40-10 or a 50-30-20. We're talking to deep capital pools that have that interest. We've seen Harvard that endowment has Bitcoin exposure. Pennsylvania State Endowment has Bitcoin exposure. So I think that's a story that will continue. And it's a lot of the opportunity we see, to be quite honest.
Let's talk about treasury companies now. Really a hot narrative since the last time we spoke. You and I talked about 21. We talked about some of your inspirations and learnings and your friendship with Michael Saylor, who of course is the chair of strategy. Now we have ETH treasury companies, Sol treasury companies, Hype treasury companies. Talk to me about the key difference that investors should be looking at when it comes to a Bitcoin treasury company. Of course, you've told us that 21 is more than that. There will be real business operations and any of these other digital asset treasury companies we're learning about.
I think it's actually unfortunate that Bitcoin gets compared to an asset like an Ethereum or a Dogecoin or Solana. I think that they're considered in the same basket of class because these projects were inspired by what Satoshi created. But I think fundamentally as investable assets, they couldn't be more different. My logic here is, human beings own a little over $900 trillion worth of stuff. So if you think broadly, we own, whether it's sovereign debt, like a bond or a long-term treasury, whether we own currencies, whether we own real estate, equities and stocks in a company, precious metals, collectibles, fine art, the collective goods that we own together as a species is a little over 900 trillion. What's fascinating about this number is about half of the stuff we own we're using as a savings account. We've monetized is what we call, is that we're using the good or the service, not to consume it. You don't own the house because you actually live in it. You own the basket of real estate because you're trying to just persist and save your wealth into the future without it being debased away from you and loss in purchasing power. So that puts the market size and the opportunity of humans that have created value and want to bring it with them tomorrow and save and persist that wealth. That's about a $400 to $500 trillion opportunity in purchasing power terms today. Us at 21, and I would argue the wider Bitcoin market views that's Bitcoin's opportunity, is to be the vehicle that's best at humans creating value for those around them and being able to save and persist that into the future. Now, if you look at an Ethereum or a Dogecoin or a Solana, what's their opportunity? Where are they disrupting and solving a problem? I would make the argument, first of all, I don't know. But and I don't know if anyone knows, to be honest. I think these narratives tend to be cyclical. They've changed quite often. But if we were to give them the benefit of the doubt and say they're going after an Apple or an Amazon or a Visa, sure, that's a $2 trillion, $3 trillion opportunity at best, given current market values of these tech stocks. And so I think Bitcoin is an orders of magnitude higher opportunity, greater asset class. It's solving a way larger problem for the world. And for that reason, it's actually better designed to capitalize a business and to be the treasury for a nation, for a corporation, for a central bank, for a pension, for a sovereign, for a family, for an individual. Whereas an Ethereum treasury company is capitalizing on an asset that might disrupt Visa. This is two fundamentally different things. One is much more venture-driven, highly speculative. It's assuming tech adoption trends and value accrual to Ethereum through adoptions of things like stablecoins, which is very unclear. The market is much smaller and the opportunity is very different versus saying the 60-40 portfolio is dead. The world needs to recapitalize on a neutral asset. Nations all over the world are debasing. It's causing these long duration instruments to severely underperform. Real rates are negative. Stocks are clearly overvalued. And everyone from China to Russia to the United States, to El Salvador, to businesses in the capital markets and to individuals all over the world are looking to capitalize themselves in a way that allows them to persist wealth into the future. Those are very different. So sorry for the rant, but I actually don't think of them similar. I think at 21, we will never own and capitalize ourselves on an asset other than Bitcoin because no asset compares.
I've spoken to a few of the ETH treasury companies, and you're right in that they're really making a bet on Ethereum powering this next iteration of the internet via products like stablecoins, like you mentioned. I'm curious, as you build out Bitcoin software, if your view is that the Bitcoin ecosystem, the Bitcoin blockchain is actually what might power the next iteration of the internet.
What's funny about the narrative that these Ethereum treasury companies have created is my co-founders are the inventor of stablecoins, and we've created a Bitcoin treasury company. So I would wage to say that the inventor and the largest stablecoin in the world probably has the market expertise that everyone else lacks. And they don't even think an Ethereum treasury company is a good idea. So I think it's a highly questionable narrative, and it goes down to why would stablecoin adoption necessarily accrue value to Ethereum, the asset itself? I think it's going to be highly competitive, and a business like Tether is not dedicated to any specific blockchain, believe it or not. Tether is issued on all sorts of chains, and Tether will be issued and used in whatever the market deems the best. There's now blockchains coming out that are specifically designed for stablecoins, which is going to be highly competitive. So again, I think that these narratives are cyclical. The reality of the situation that we're all in is that we're all speculators, whether you know it or not. When you walk out on the street, you see people going about their day, sitting in traffic, waiting in line to get a coffee, whether they know it or not, they're a speculator because the currency that they're using is constantly losing value every single day. And so it is an open competition to basically say, hey, you need to save your money, put it over here with me. And, people are going to create narratives and create ideas on why, you should do that over other things like a bond or like an index of stocks or like a Bitcoin Treasury company. And so we're living in this frothy environment where we're all on this currency debasement train together, and everyone's competing with how and what's the best way to persist that wealth into the future. But again, I think it's highly speculative. It's very unclear. It's not necessarily proven. Where you look at an asset like Bitcoin that the United States has a strategic reserve for, that other countries around the world have started to acquire and mine. And it's a $2.5 trillion asset that's already the 5th largest asset class in the world. It's just, again, it's worlds of difference. And I think value will continue to accrue to Bitcoin. Yes.
All right, Jack, 2 questions for you here. What do you say to people who think you're trying to pump your own bags?
I don't necessarily agree with the premise of that question. I store my wealth in the best place for me, my family, my loved ones, my employees, my shareholders. It's the hardest thing I can possibly own. And hard is in reference to how hard is it to make more of it. And that's the very logical decision. I wake up every single day and I say, where's the best place for me to store my effort, my labor, my time, my energy? And it continues to be Bitcoin. I make that decision at the margin every single day. And then I would say my work to go and help people live out the experience that I've had and being able to persist wealth in the best performing asset. You can look at it as a very self-interested endeavor, but you can look at it as a very honest and entrepreneurial endeavor to help like so much of the world that has lost so much of their purchasing power by unfortunately sitting in something like the dollar or something like bonds or something like the S&P 500. So I disagree with the premise of the question is that, if you have found something that can better the greater half of humanity, are you selfish for empowering others to benefit from it as well? Or are you selfish for keeping it to yourself? So I disagree with the premise. I would assume that if a certain basket of humans found the future that can usher in a level of prosperity, it is the moral and principled thing to do to actually spend all your time and waking hours helping others gain benefit and access to it as well.
I want to come back to your ethos. Like I said, last time we spoke a lot about your philosophy. We spoke about your family and the deep roots you have, your familial roots in the Chicago financial system. And I want to end our interview here. Is TwentyOne an attempt at building a bridge to that old world, or is it an effort to build a lifeboat to a new one?
I think both. For us, myself, Tether, we want to capitalize the world on Bitcoin. We think that the end state for this new chapter for humanity and society ends with Bitcoin. It's a fair, equitable financial system that solves the world's largest problems today. So I would say the way that we view what we're doing at TwentyOne is there is a large amount of capital that is sitting in pain. They're struggling. They're losing purchasing power. A lot of the old ideals are now being disrupted. And there's potentially a prosperous new world on the other side of the water. And it's Bitcoin, it's fixed money supply. Everyone has access to it. It's cheap to move. It's free to hold. There's privacy benefits. And I think what we're doing is we're building a bridge from the old world to the new world. And we're walking out in the middle of that bridge and we're showing everyone it's not going to break. Because I think people are nervous to walk across the bridge. How stable is that bridge? How stable is the other side of this potential new prosperous place? And myself and Tether, we've been in the space for well over a decade. We've built all sorts of businesses, and we want to show the capital markets, the endowments, the pensions, the sovereigns that it's safe and we're going to go out right in the middle of the bridge, and we're going to stand there, and we're going to show you that it's not going to break. And then it can actually withstand and hold the future of society and solve some of our largest problems. And that's, I think, the role that we want to play in the capital markets. And we're going to do that not only through Treasury, but again, building Bitcoin-focused products, financial services, and trying to help as many in the world as we can to cross that bridge and enter a more prosperous time.
Jack, it's been such a pleasure catching up with you. I hope we get to do it again soon. And I really hope you run into Powell in an elevator down there in Jackson Hole.
Fingers crossed. I think he could use some of our advice as Bitcoiners. But I appreciate it. Thanks for having me anytime.